IRA conversion rules you may not know. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's AdBits, a specific 5-year Roth IRA conversion rule most people don't know of. So Roth IRA conversions are always a nice controversial topic. It's probably the topic I have the most fun with. It's also the topic I probably get the most questions on from clients, maybe other than prohibited transactions. Why? Why do I like it? Because number one, there's no right or wrong answer. So that's always good, especially as a lawyer, tax attorney. I say former because I don't practice law anymore, but it's always great to debate with clients about a question where there's really no right or wrong answer, right? That's the best part of being a lawyer. You can always CYA. So why is there no right or wrong answer with conversions? Because you just don't know what the future holds, right? If I convert Apple stock, if I convert a piece of real estate, if I convert Bitcoin, if I convert gold at today's value, the idea is that the value will go up in the future, but we do not know what the future is. Even ChatGPT cannot guarantee the future at this point, or even disclose what the future will be. So there's a couple of factors that one should consider if one is contemplating a Roth IRA conversion. Like, number one, can you afford to pay the tax on the conversion, right? Do you have the money around? It's great to do everything in Roth and get all your pre-tax to Roth. Why? Once you're 59 and a half and the Roth's open at least 5 years, which I'll get into that 5-year rule, it's all tax-free. So that's the play to get pre-tax to Roth, where if you take IRA distributions from a pre-tax IRA, after 59 and a half, you still pay income tax on what you pull out. You escape the 10% early distribution penalty, but you do not pay, but you still have to pay tax. So obviously getting into the Roth world is super advantageous. So how do you do that? Well, you do a Roth conversion. Now, since 2010, there's no income limitations for conversions. Anyone, whether you're Elon Musk or me, anyone can do Roth conversions. What do you think about when you do a Roth conversion? So as I mentioned, you got to be able to pay the tax, because whatever you convert, whether it's stocks, cash, assets, that's added to your other income on your 1040. So let's say you make $80,000 as an accountant, and now you convert 40,000, you now pay tax on 120. So your tax bracket will go up. So you got to be able to pay the tax on that extra amount. Number two, how old are you? Are you 90 or are you 30? Obviously, the younger you are, conversions have more value. There's more potential for tax-free growth. Thirdly, what's your tax bracket today? Is it super high? Or super low? Maybe you have a lot of losses, a lot of NOLs, or you just didn't work much this year. Just kind of played golf all year and had an off year. Maybe you have some room to take in more income. What do you think your tax bracket will be when you retire? Right? No one knows what your tax bracket will be at 72 or 62. But do you think you'll be retired? Will you be a professor and just retire on some Social Security, some savings? Or do you think you're going to work hard till you die and always be at a relatively high tax bracket? That matters, right? If you think you're going to have a low tax bracket at 70 or 60, then maybe a conversion doesn't make as much sense, because you're going to have a low tax rate. So like, who cares, right? So you pay 15-20% on the conversion. On the income when you pull out it in 60, 65, it's not horrible, versus 35 or 40%. Then having a Roth is a lot more valuable, where your tax rate is 35 to 40% versus 10 to 15%. So those are all the things. And ultimately the final, probably the most important one, other than can you afford the tax, is do you have faith in what you're doing? Like, is this a long shot? Like, hey, I'm buying Zimbabwe bonds, or I'm investing in a business in Venezuela, or buying into a project in Lebanon, versus, hey, this is a great AI startup that I think will grow, or it's Bitcoin. I think Bitcoin's going to go to 200,000. So you have to have a lot of faith in what you're investing in, because the horror side of conversions is you convert at X dollars. Let's say you buy Silicon Valley Bank at $40 2 years ago, and now it's worth zero. So you just paid Uncle Sam tax at $40, and now you got $0 left. So that's obviously not a great situation. So what do you need to know about, what are the peculiar rules you need to know about for conversion? So I said the basics are this: you pay tax on the fair market value, it's added to your 1040, but you can take into account obviously losses and what other income you have, but that's what determines your tax rate. So these are the two rules people don't understand. Now, if you do a conversion, can you just pull the money out and use it? Well, the answer is yes and no. More of no right or wrong answer. Well, there is a right or wrong answer. If you're under 59 and a half and you do a Roth conversion, you still have to wait to your 5 years. You still have to wait to your 59 and a half to do the conversion and get the tax-free distribution. So if I'm 55 years old and I do a Roth IRA conversion, I can't pull the converted amount out. I still have to be 59 and a half and have 5 years. Whereas if I'm over 59 and a half, I can pull the converted amount out anytime I want. Okay, which seemingly doesn't make a lot of sense, right? You're under 59 and a half. Why do you still have to do the 59 and a half 5-year rule for the whole amount? Whereas if I'm over 59 and a half, I just need to wait 5 years to pull the earnings out. The converted amount I can always pull out. And I guess they didn't want people messing around, right? Doing conversions at 45 and just pulling all the money out. So under 59 and a half to do a Roth conversion, 5 years, 59 and a half to pull up the converted amount out. Over 59 and a half, you can pull the converted amount out, but the earnings are 5 years. Now, there's a difference between converted amount and earnings. Converted amount is this. Here's an example. I have $40,000 in cash, pre-tax IRA I want to convert. The converted amount is the 40K. Now I buy Apple stock, and that $40,000 in a year is now worth 50. This $10,000, the growth is the earnings. And there you have to wait 59 and a half and 5 years if you're under 59 and a half. If you're over 59 and a half, you just have to wait the 5 years to pull the earnings out. The 40K, if you're over 59 and a half, you can pull out anytime you want. If you're under 59 and a half, you still got to do the 5 years, 59 and a half. The 5-year window is separate for each conversion. So if you convert in 22, it's a 5-year on that conversion. If you convert in 24, it's another 5-year on that conversion. Convert in 23, it's 5-year on that. So the 5-year window is per conversion. Whereas if you make a Roth IRA contribution, let's say you're 57 years old, you put $1 in a Roth IRA, and then 6 months later you put a $1 in a different Roth IRA, and 2 years later you put $1 in a different Roth IRA. The 5-year clock starts the first time you do a Roth IRA. They're not separate 5-year clocks for your contribution window. So there's the 5-year window for contributions, which is separate than the 5-year window for conversions. The 5-year window for conversion is per conversion, and the 5-year window for contributions is once you hit that 5 years, you're done, right? So if you're 18 years old, put $1 in a Roth IRA, and you're 60, you've solved the 5 years. Even if you just made another Roth IRA contribution at 59, you already satisfied the 5 years, so you can pull money out at 59 and a half, whatever you have in your Roth, because you already satisfied the 5 years. The conversion is separate for each conversion. So if I convert June or July 2023, I convert 100K, I'm under 59 and a half, I have to wait till I'm 59 and a half. The 5 years will be done because I'm only 47 to pull all the money out. If I was 60, 65, and I convert 40K, I can pull that 40K out anytime I want, but the earnings on that 40K have to be 5 years and 59 and a half. And if I did another conversion in 3 years, I'd have to do another 5 year for that amount of that conversion. So you got to basically treat every converted amount as a separate bucket, and that 5-year window is per each separate bucket. So that's what I want to do today's podcast. That 5-year rule is like really misunderstood. It's actually kind of confusing because there's different rules for contributions, which is like money out of your pocket, 6,500 or 7,500 if you're over 50, and conversions where you take pre-tax and go to Roth. That is a separate 5-year bucket for each conversion, whereas the contribution, once you hit 5 years, you're done. You don't have to satisfy it any longer. So hope you guys enjoyed the podcast. Hope Roth conversions make a little bit more sense. Obviously, if you have questions, let us know. That's what I love to do. Love chatting with all of you, clients or not. I don't care. I'm happy to talk with you. If you have questions, submit a comment. I do my best to get through those comments as quick as possible. You can always email info@IRA Financial. Just say, AdBits, ask Adam. or just call our amazing team. You can go to our website, IRA Financial Group, IRA Financial Trust, IRAFinancial.com. And we'd love to hear from you. You don't have to be a client, just have a question and a comment. Hopefully you will become a client because you'll be so enamored by our amazing team of experts. But either way, we're just here to help. So appreciate you guys spending some time today. Hope you have an amazing rest of your day. And this podcast drops every Tuesday, depending how busy we are. It's usually an every Tuesday drop. So hope you enjoyed it. Have a great day and take care.